So this is part number 44 of this multi-part video series for positional stock traders. This is a video that many of you had requested. Many of you have been asking me about the relationship between price and volume and institutional buying and selling and the colors of the bars on the chart. So I have summarized everything for you in one single video. This is that particular video. Couple of students have sent me emails regarding this. So I thought this is something that is on people's mind. So why not make a video on this? So this is part number 44. And we have looked at this chart, MOIL, weekly time frame chart. This is 15th April 2024. So as per the SEBI regulations, we are allowed to discuss this chart. Here we are not going to discuss the breakout or trade execution or trade management. Here we are going to discuss individual bars. Okay. So as we have discussed earlier, my main focus is institutional selling. My question is, are institutional are institutions selling the stock? So when I look at the base, that is the question in my mind. I am not bothered about institutional buying. Why am I not bothered about institutional buying? Because we are only looking at stocks which are in a confirmed stage 2 uptrend. And a stock can only be in a confirmed stage 2 uptrend when institutions are buying the stock, right? How do you know that a stock is in a confirmed stage 2 uptrend? Well, for that, we need to go to the Mark Minervini trend template criteria, in which he says that the price is above the 50-day simple moving average, the 50 days above the 150-day simple moving average, and the 150 days above the 200-day simple moving average. That is the basic trend template criteria. And preferably all the three moving averages are sloping up whenever you are looking at the chart. That's the basic trend template criteria given by Mark Minervini many years ago. That is a stock which is in a confirmed stage 2 uptrend. So why should I be bothered about institutional buying? I am more concerned about institutional selling. When a stock goes up and when it forms a base, I want to know in that base, are institutions buying or selling the stock? Most importantly, are they selling the stock or not? Buying is already confirmed from the previous uptrend and the moving averages on the daily time frame chart. That is one thing. Second thing, you remember I had discussed about four types of closing: up closing, down closing, strong closing, weak closing. Okay. So the color of this bar has got to do with up and down closing. So red color means the week has closed below the previous week closing. That's called red color. Green color means in that week, the stock has closed above the close of the previous week. So the color is dependent on up closing and down closing relative to the previous week. And the color of the price bar and the volume bar always matches. Then there is strong closing, weak closing. So if you look at this bar, this red color, the closing is below the midpoint of the bar. The midpoint is high plus low of the bar divided by 2. The closing is below the midpoint of the bar, you can visually see. This is weak closing. However, if you look at this red bar, here the closing is strong because the closing is above the midpoint of that particular bar. Okay, so there is strong closing and weak closing. Color does not matter. Okay, for example, if you look at this green bar, that is strong closing. If you look at this green bar, that is weak closing. So even on a green bar, you can have a weak closing, and even on a red bar, you can have a strong closing. Here is the example. This is a green bar, but it's a weak closing, closed below the midpoint of the base. Here is a red bar, but it's a strong closing because it closed above the midpoint of the base. Why is this information important? Why am I discussing four different types of closing? Well, because that tells us institutional activity on the chart, especially on the weekly time frame chart. So if you notice in this base, right, how many red bars are there? One, two, three, four, five, six. All red bars, all six red bars are coming on low volume. Low volume means what? Institutions are not selling, right? So that's a clear indication that even though the closing has been down for that particular week, it has not really come on volume, which means institutions are not selling. If institutions were selling the stock, or if institutions were dumping the stock, you would see that in the volume, especially on the weekly time frame chart, right? So I have made a table to simplify all of this for you. One of my students sent me this table on email that simplified everything. So I expanded that table. Okay. So have a look at this. Let's say the closing is down. So the closing in a particular week is below the closing of the previous week. So that is down closing. So obviously, just a second. So obviously the color of the bar is going to be red. The first table is about red color bar on the weekly chart. The second table is about the green color bar on the weekly chart. Okay. Now, when you have red color, you have strong closing, weak closing, correct? Strong closing, weak closing does not depend on the color. It depends on where the stock has closed relative to the midpoint of the same bar. Then you have high volume, low volume. Okay. So these are the permutations combinations. So let's look at the first one. So it's a red bar. You have a strong closing on high volume. Okay. So for example, we go to this chart. So you have a red bar and you have strong closing because the stock has closed above the midpoint of the bar. And you have high volume. So here it shows low volume, but let's assume that the bar has high volume. Do you think institutions are selling on that in that week? No, right? Because the stock has bounced from the low of that week, and that too it is coming on high volume. Here it shows low, but assume for this bar you had this kind of volume. Okay. In that case, the institutions are not selling, they're actually buying the stock. The stock actually bounced from the low of the week. So if the color is red, the closing is strong, and the volume is high, institutions are not selling. Okay. Then comes red color, low volume. So you see, there is red color, low volume, red color, low volume. In both these cases, institutions are not selling because if institutions were selling, then the volume would not be low, right? So we have covered three scenarios. Look at this scenario. There is a red color bar, weak closing, high volume. That's a problem for us. So for example, let's see here. The red color and weak closing. So red color means down closing. Weak closing means the stock has closed below the midpoint of the bar, that too near the low of the bar. And that too it is coming on high volume. So in this week, institutions have probably sold the stock. Okay. That's a bar that is not favorable. That is not in our favor. Okay. Do you see this kind of bar in the base? No, right? Because every bar, all six red bars inside the base have come on low volume, which indicates institutions are not selling. And then you note that increases the quality of the base. And that's how you saw the base, the stock broke out of the base on extremely high volume. In the same week, it crossed the blue zone and the green zone. It went up like 50-60% from the pivot point, which I will show you shortly. So this discussion is extremely important. If you understand this table, your problem will be solved. You will be able to know which base is a high quality base, which base is a poor quality base, even if you're trading the daily time frame chart. Okay. So let's say you are sticking to the swing trading and positional trading on daily time frame chart, you can come to the weekly time frame chart to just check on volume, because on the daily time frame chart, volume bars are very noisy. There is a lot of noise in the volume chart on the daily time frame, but in the weekly time frame, it's crystal clear like this. It's very evident from this base that institutions are not selling. Okay. Then you look at up closing. Now we are talking about the green bars. You will notice that the result is exactly the same. Why? Because here I have not written institutional buying. I have written institutional selling. Why have I not written institutional buying for green bar? This is very important because we are buying a breakout from a base. The only concern in our mind is whether institutions are selling the stock or not. Institutional buying is not a question for me because that is already evident from the trend template, the moving average criteria on the daily time frame chart. Why should I ask myself whether institutions are buying the stock or not? Obviously, they are buying the stock. Otherwise, how would the stock be in a confirmed stage 2 uptrend? They're already buying the stock. The only question is in the base, within the stage 2 uptrend, when the stock is forming a base, is that base forming because institutions are selling or retail people are selling? Okay. So the results are exactly the same, even though it's a green bar. Obviously, if the volume is low, that means institutions are not selling. Okay. If the closing is strong, that means strong on high volume. Obviously, institutions are not selling, they're buying. So if you look at this bar, so for example, this bar, right? Or even this bar, where the stock closed above the 10-week simple moving average. Green bar means up closing. Strong closing means the closing is above the midpoint of the bar, closing near the high of the bar. That too on high volume. This is not institutional selling, it is institutional buying. By the way, look at here the volume, the number of shares traded. 18 million shares traded in that particular week. Multiply 18 million with the average price on this bar, like let's say 300. So 300 times 80 million, that's the amount of money that is being traded in the stocks. That's huge money. That money is not coming from retail people. That money is coming from institutions. Okay. Look at the price, 300 rupees, 18 million shares traded, 18 million times 300. That's a lot of money coming into the stock. And the stock closed strong and the stock closed up. That's what is represented by the green color. How can there be institutional selling in that bar? There is actually institutional buying. Okay. And then week closing high volume. Yes, institutions are selling, even though it's a green bar. Okay. So let's find that. So this is week closing, but it is not low volume. Let's look at this. This is also not weak closing because the closing is almost near the midpoint. Let's see if we can find a bar which has got high volume. Even this, the closing is at the midpoint. We don't see it here. No, I'm not able to find it here. I'm looking for a green bar, which has, see, look at this. We found it. I'm looking for a green bar which has got a weak closing. So green bar means up closing, but the closing is below the midpoint of the bar or near the low of the bar. This is weak closing coming on high volume. That is called institutional selling. Okay. In this week, institutions actually sold the stock. If institutions had not sold the stock, if they had bought the stock, the closing would have been higher, right? It's very simple. See, that is why I am using bar charts on a weekly time frame chart, and I'm using candlestick chart on the daily time frame chart. Remember these golden rules. Weekly means bar chart, daily means candlestick time frame, daily time frame means candlestick chart. Okay. This is what we are using for ourselves in our breakout trading system. There is no hard and fast rule. You can use any chart that you are comfortable with. But this is the ideal solution that I have found over the years. Because on a weekly chart, the opening price really doesn't matter. And on the weekly chart, you will find less number of windows, falling window, rising window. On the daily time frame chart, the opening price matters because we are buying it in a very tight range. We are not buying extended stocks on the daily time frame chart. Okay. Now let's move the price ahead. The breakout was very powerful because of the quality of the base. I think this was base number 2, and the relative strength must have been 87, 86. I don't remember. You can watch the video in this series in which I discussed this stock. Okay. There I have discussed it in detail. So before it started falling, let's see how much it went up. Before it closed below, before it closed below the 10-week simple moving average. See, from the breakout till here, there is not a single bar which has closed below the 10-week simple moving average. It has gone and bounced off that 10-week simple moving average, but it has not closed below except for this bar. Okay, that too it is coming on low volume. So if I look at the distance traveled, so from the pivot point till the high of this bar, it is 68.93%. Okay, and this is roughly 3 months from April till July. So 22nd April till 8th of July. So April, May, June, July. So roughly 3 months, around 12 to 13 weeks, 68.93% return. That is coming from the quality of the base and the relative strength of the stock. You understand now? On the weekly chart, it looks very small. See, now you understand. On the weekly chart, this movement looks very small, but in percentage terms, that's a fabulous return. So make note of this table. Maybe take a screenshot of this. I will remove myself from here. Maybe you take a screenshot of this table, or maybe pause the video, note this down. I will tell you a shortcut to understanding this. You don't need to memorize this table. Okay. Remember this. It doesn't matter whether it's a red bar or a green bar. If the volume is low, institutions are not selling, because if institutions were selling, the volume would have been high. If the volume is low, institutions are not selling. Okay. If the closing is strong and volume is high, obviously institutions cannot be selling. Otherwise, how can the closing be strong, right? So when the volume is high and the closing is strong, irrespective of the color, institutions are not selling. The problem is when the volume is high and the closing is weak, irrespective of the color, institutions could be selling in that week. That's all it is. Okay, both these tables are same because I'm only worried about institutional selling. I'm not worried about institutional buying because that is evident from the uh, moving averages movement on the daily time frame chart. Price above the 50 day above the 150, and the 150 above the 200. Okay. So I hope this video has been helpful. If you apply this concept on the weekly time frame chart, even if you're taking a trade on the daily time frame chart, I think this will help you. Thank you so much. I will see you in part number 45.